Good afternoon, everyone. Welcome to today's webinar, Unemployment Insurance Compliance for Professional Employer Organizations. We're going to get started in just a second here as people are still logging in. Just a couple things real quick on the audio side. On your end, I'd recommend choosing the phone call option that usually provides the least amount of feedback. If you haven't already done that, you would find that under the audio tab on your controls. And also you'll see a tab for questions. If you want to set a question at any point throughout the program today, please use that tool to go ahead and submit your question, and we'll try to get as many answered as we can during the program, and if not, answered after it concludes. Today's program is being recorded, so you will get a automatic email tomorrow with a link to the recording if you want to go back and reference that. So with that, we'll go ahead and get started, and I will turn it over to Jennifer Chappelle and Jeremy Dexter.
Hi everyone, this is the Professional Employer Organization PEO discussion that we have organized at the request of multiple people who had questions about how we administer the Act in Indiana. So Indiana Code 2246.5 creates two types of reporting for PEO entities in Indiana. PEOs can report at the PEO level, which a lot of people refer to as the employer level, or they can report at the client level. And reporting at the client level is reporting as an employer would report for themselves. So one of the things that people like to know is, what is the difference between these two things? First of all, let's talk about how you decide the type of employment reporting that you're going to do. Whether you wish to file at the PEO level or the client level, you must file State Form 52098 on or before the first day that the PEO is liable to make contributions under the Act. Indiana is a first dollar of liability state. That means at the point in time that you pay the first dollar in payroll to the first worker performing services localized to Indiana, you become liable under the Act. That is the day on which you must file the 52098 to be timely to elect to report at the PEO level. If you fail to elect to report at the PEO level, you are treated as a client level PEO in Indiana under the statute. Currently, we do know that we have several entities that are reporting at the PEO level who have never made an election to be treated that way. This is less than a great situation for the PEOs who have failed to elect, as the agency is required to compel those employers to report at the client level, and will need to take action in that direction in the relatively near future. As indicated on the prior slide, this is fairly new law in Indiana. The election was supposed to be made for those entities operating in Indiana prior to 2014 by the first day of 2014. You had from the time the law was passed in July of 2013 through January of 2014 to make that timely election. After that, you've had until you became liable to make contributions under the Act to elect. So if the 52098 is not timely submitted, the PEO is required to report at the PEO level. And then we provide a link here to our forms and downloads page where you can secure the 52098 for any new PEO entities that are in Indiana. Keep in mind that if you have substantial common ownership, management, or control with any other PEO, whether or not separately incorporated, you are required to report at the same level. If any entity is reporting at the client level, all entities must report at the client level. You can start at the PEO level and change to the client level under our statute, but you can't change the other direction. Once you're at the client level, you must continue to report at the client level throughout your lifetime as a PEO in Indiana for unemployment purposes. So what is the difference between a PEO level PEO and a client level PEO? At the PEO level, all the clients are blended together and the clients are no longer distinct or separate entities. At the client level PEO, the clients remain separate. The PEO asks as a basket to hold them together, so to speak, but they remain distinct and separate. They come out of the PEO exactly the same way that they went into the PEO. The only thing that really changes at the client level is that the PEO is financially responsible for the employers at the client level until the employment relationship between the PEO and the client is severed and notice is sent to DWD that that has occurred. So at the client ad level, PEO level client ad. That's not at all confusing to talk about client level and PEO level and clients being added and deleted. I apologize, it's just the only way that we can refer to them. So a client is added to a PEO level PEO. They become part of the blended entity, and blending is a transfer of a trade or business under Indiana Code 22410.6 and or Indiana Code 22411.57. For those of you who don't live every day with those statutes, 10.6 is successorship between unrelated entities, and 11.57 is a transfer of trade or business where there is substantial common ownership, management, or control. The shorthand way of referring to this blending is a successorship. So to put this another way, if you are a client and you are joining a PEO at the PEO level, a successorship occurs for the limited purposes of unemployment insurance liability and determination of contribution rates. The PEO is required to notify DWD if they are adding a client within 15 days of the last day of the quarter in which the agreement became effective. Only fourth quarter new clients can cause the PEO's rate to change during the current year if the PEO level PEO is timely notifying DWD of the acquisition. The way that acquisition or successorship affects your merit rate once you have an established rating is that you retain your established rating through the end of the calendar year in which the successorship occurs. Any year after that is blended. So if you notify us in January that you acquired someone in the fourth quarter, we're going to change your rate in the same calendar year. Otherwise, we will not. Again, that is if the PEO makes a timely notice to the department. Now, if the department finds out in 2019 you added a client in 2017, we'll recalculate your 2018 and your 2019 rates. And we'll do that up to 4 years in arrears unless we simultaneously determine that the employer, meaning the PEO, knew or should have known they had a duty to report. Then we'll go back up to 10 years. And the PEO will owe all of the contribution plus interest plus penalty in the event that adding that client causes the rate to recalculate to a higher amount. It is always in the best interest of a PEO level PEO to promptly notify the agency when they have added a client. Deleting a client at the PEO level PEO, the only identity the client has is part of the blended entity. Clients that leave the PEO are charged for all qualifying workers that separate from the PEO. That means any worker for any client of a PEO level PEO that is awarded unemployment benefits is charged to all of the clients that left or leave the PEO where the PEO was part of the base period for the employment. And for those of you who also don't live and die by base period, that is the first 4 of the last 5 completed quarters, not including the quarter in which the claim is filed. There's a huge chapter on benefit charging and base period and how to calculate what the base period is from when a claim is filed in our employer handbook. If there are any questions on that, just type them into the chat and we will have time at the end of this presentation to go over your questions. When a client leaves the PEO, you need to notify DWD that you're removing the client no more than 15 days after the termination of the PEO relationship. Notice that that is a different 15-day limit than adding a client. When you're adding a client, you have to let us know within 15 days from the last day of the quarter. When you are terminating a client, you have to let us know within 15 days of the event. And then notify DWD of all added clients before we can remove clients, because if you don't, we have to put the clients we removed back in to hold the acquisition that occurred previously so that they get the right blend of your experience balance when they come out. So looking at our smoothie analysis here, or analogy, we put all of the things into that blender. Every client you add goes into your blender. And then when your clients come out, we take the ratio of what they added in, and we look back for the last 2 completed quarter, what their payroll dollars were compared to your total payroll dollars. And that's the percentage of your blended smoothie that they get when they come out. That's also the percentage of the experience balance and the liability for those unemployment insurance claims that clients leaving a PEO get. One of the things that's been really frustrating to our PEO clients leaving a PEO level PEO is that they didn't understand why they got notices, statement of benefit charges, for all of these people they'd never heard of. And the reason is that we are required by statute to tell an employer when we are going to take an action that affects their experience balance. Since everything that was blended together comes out in proportion to the payroll of the client when the client leaves, they take a proportion of what was blended together. They don't just take what they came in with. If you want to keep your clients as they were, entering and leaving as the same entity with only liability for the employees they actually had, you would have to be a client level PEO. Otherwise, they're just all mixed together. And when they come out as a part of that blended whole, not as the unique entity they were when they entered the PEO. So at the client level, when you add a client, we never blend your client with any other client of the PEO. You do need to notify DWD about the new client no more than 15 days after the last day of the quarter in which the agreement was effective. The PEO becomes financially liable for the contributions that need to be paid by the client, but entering the PEO at client level doesn't change the qualification or the merit rate or the liabilities associated to the client of the PEO. They remain entirely unique. The PEO is only taking financial responsibility for the payment of the unemployment contribution and the filing of the reports. Other than that, the client is completely unchanged. When you delete a client at the client level, the only change we're making is the financially responsible party. There is no requirement in the statute as to when a PEO at client level must notify the agency that they've removed the client, but the PEO is financially responsible until it makes that notification to the agency. So it is, again, in the PEO's own best interest to tell us when that relationship is severed, because if you stop reporting for your client and the client doesn't report for themselves, all failure to file penalties are associated to the PEO, not to the client, because you haven't notified us that that liability has been terminated. So do yourself a favor, notify us as soon as you terminate the relationship. Okay, so the forms. There are only 2 forms associated to PEOs at this time. The 52098 is used to elect the reporting type, and the 52099 is used to report all clients that are added or removed. Those are the only things you have to remember, 52098, 52099. You can find all of our forms under the Employer Services Forms and Downloads menu at our primary website, www.in.gov/DWD. Okay, I've had my turn, and now it's your turn. Please type your questions into chat, and Jeremy will read them off to me.
So the first question we have here, Jennifer, is does the PEO for client level become financially responsible for a previous PEO balance?
Good question. If the client was previously the client of a PEO at PEO level, they remove themselves from the PEO at PEO level, they are a successor to that PEO. If that PEO owes money, or if any of the clients of that PEO owe money, the predecessor liability is associated with the client and therefore would be associated to the PEO at client level, because joining a PEO doesn't strip any of that away. The client is what they were. So if they had predecessor liability before they joined the PEO, they have predecessor liability after they join the PEO at client level.
How long after a client leaves the PEO level client reporting does the unemployment benefits from our other clients get sent to the client?
So if you're at the PEO level and you have a client that terminates and we hold them to be a partial successor of the PEO, they will get statement of benefit charges for any claims paid that are going to affect their experience balance until they are out of the shared base period. That takes at maximum about 2.5 years, assuming that there are no delays because of an appeal of benefits. Sorry, I can't be more exact than that, because if, for instance, somebody is awarded benefits, the benefits get paid, the employer protests, the protest goes to an appeal, the appeal gets appealed to the review board gets appealed to the Court of Appeals, the Court of Appeals gets appealed to the Supreme Court. It can take years. And that's true if you're at any employer in Indiana. Normally, it's about 2.5 years after someone separates from you that they can no longer be in your base period in any way. But sometimes claim payments are delayed and you don't get your statement of benefit charges until such time as the benefits are paid to the claimant.
Who is responsible for the liability if a PEO does not stay current on the client's unemployment insurance liability?
The PEO and the client are jointly and severally liable for both the reporting and the payment. So while we will hold the PEO to be the primary financially responsible party, the client does have to pay the contributions if the PEO fails to do so.
Which level is the default reporting level, PEO or client?
Client is the default. You must affirmatively elect PEO level reporting in order to report at the PEO level.
So with PEO level reporting, as you said, a client leaving, they still get notices of benefit charges in proportion to the amount that they inherited. Do they also get credit for the same proportion of PEO wages?
A PEO client leaving the PEO gets wage-based credit for the employees that they are going to report in its entirety. So even if you're only a partial successor to the PEO, when you remove your employees from the PEO, if the PEO is met wage-based in the calendar year, you get the full 9,500 or the full portion of the wages already reported by the PEO for anyone that you take on. That is not proportionate. You get liability for your own employees during that shared base period, only in proportion with the transfer of experience balance. So that's kind of confusing. Good question.
At the PEO level, is there joint liability for tax, or is the PEO alone responsible? I think maybe you already answered that with your prior question.
So what will happen if the PEO fails to report your employees, whether you're at the client level or at the PEO level, and the agency does an investigation of the failure to report? The person for whom services are performed ultimately becomes responsible for the reporting and payment of the workers. To PEOs at the PEO level or at the client level, be very careful of misclassification, because if your client is misclassifying workers and you are taking responsibility for reporting all of their employment, you have that liability also. It goes both ways if we do an investigation on a worker for the employer and find that they have not been reported and they are having those 1099s issued through the PEO, because the PEO is taking responsibility for the classification and can be held accountable for a block claim in that instance. If, however, the employer, even if they're in a PEO relationship, is issuing the 1099s under their own FBIN number, we will find the client to be solely responsible for the misclassification, and we will assess the contribution liability against only that employer that issued the 1099.
What is the effective date of the client relationship? Is it the date of the contract, the effective date of the relationship, or the date of the first payroll by the PEO, or something else?
If the client has payroll in Indiana prior to entering into the co-employment relationship with the PEO, the effective date would be the date on which the PEO agrees to be responsible for the payroll of the client. If the client does not have any payroll or liable payroll in Indiana prior to joining the PEO, then the effective date is the first day on which the PEO pays wages to an individual performing services under the co-employment contract.
So when a client joins a PEO reporting at the PEO level, how does the client history, such as reserves, affect the PEO?
The experience balance and liability for unemployment claim filing during the shared base period are both transferred to the PEO. PEOs at the PEO level can have predecessor liability if one of two things happen. If the client entering the PEO has failed to make all payments, or if the client entering the PEO has failed to file all reports, then the PEO can be responsible both for the unpaid contributions under the predecessor liability portions of our statute, or they can be responsible for the failure to file penalty that gets eventually assessed to the client for not filing the final report. The PEOs at the PEO level can get information from the agency prior to entering into the final PEO contract by notifying the agency that they intend to enter into a co-employment contract and asking the agency about the standing of the employer with the agency. The information that we will return is the merit rate, the outstanding liabilities, if any, and I believe that we can tell you the exact amount of the experience balance as of the last merit rate contribution. Other than that, you would have to get information directly from the client or ask the client for their most recent merit rate notice in order to get that information. But we will definitely tell you if the employer is in good standing. We will not tell you the exact amount of any liability that's outstanding to us, only that it exists, and only if any outstanding contribution reports exist.
We had a similar question, but in the opposite direction. The first part of this question is if a PEO has a negative experience balance and they are at the PEO level, and a client leaves the PEO reporting relationship, does the client get a portion of that negative experience balance?
Yes, the client gets the portion of the negative experience balance in relation to their last 2 quarterly payrolls, proportion of the total payroll reported by the PEO. So if you're a PEO with $100 worth of payroll, gross payroll, and my portion of it as your client was $1, I get 1/100th of your negative experience balance and 1/100th of your liability for any claims filed up to the quarter immediately preceding the one in which I depart. I don't have any liability for the unemployment insurance filing related to the partial quarter when I depart, but the last full quarter, I have to go and take that with me.
So then, as an employer who is potentially looking to hire a PEO, will DWD provide me any information about that PEO, such as the reporting level, experience balance, things like that?
Good question. The statute specifically provides that if you are going to acquire all or part of an existing Indiana employer, that we will tell you whether the entity is in good standing in terms of reporting and balance. My recommendation would be to ask the PEO for their last merit rate notice, because that's going to give you all of the information that we had as of the last time we calculated the balance. That won't tell you anybody they've taken on in the interim, and we only calculate merit rate balances, officially calculate merit rate balances on the computation date for the next merit rating. So we can give you a generalization of where your merit rate or your experience balance would be at any point in time, but your official computation occurs only once per year.
So if a client is in a client reporting PEO company and the PEO fails to pay the tax due, is the client still responsible?
We would hold the client to be responsible, yes. We would also hold the PEO to be responsible.
Are we able to find out if a client has liabilities with Indiana before we accept a relationship with them?
Yes, you can ask us whether or not your potential client is in good standing. You should notify us no less than 5 days prior to the intended date on which you're going to enter into the contract, and then we can release to you whether or not they have outstanding liabilities, outstanding quarterly reports, and whether they have a positive or negative experience balance.
So I got another question asking if Bob could get closer to the microphone. I think you meant Jeremy because that's me talking, not Bob. But I unmuted my speaker, so you should be able to hear me more clearly now. We were getting some feedback earlier, and I didn't want to have that come over the broadcast. So the next question is, does the client see secure information such as SSN when they get the benefit charge statements after they terminate the relationship with the PEO?
No, the statement of benefit charging has the employee's name and the last 4 digits of the Social Security number only. We no longer provide the complete Social Security number on statement of benefit charges that are mailed. If you are a SIDES or an eSIDES participant, you can see the full Social Security number there. SIDES is mostly agents, though, and eSIDES is a secure, confidential portal for employers.
So this is a follow-up question from earlier on the one that you were addressing the wage-based credit. What I think the person is referring to is charge reversals. And so the question is, the former client leaves and gets a 5% proportionate notice of charges to their account. Are they actually better off because they also get 5% proportionate credit for the wages reported by the PEO? I think this is a charging question, as far as I can tell.
Okay. Whatever you take with you in terms of percentage of liability, you take with you in terms of percentage of experience balance. So if you are with a PEO that has $100 positive experience balance and you take 1/100th of it, you get $1 of experience balance. Then you get 1/100th of liability for any claims that are filed. So if you get a penny worth of claims, you had your dollar to pay it. If we make a reversal, determine that the worker has received benefits to which they are not entitled, and you are a contributory client of the PEO, you get the credit, your penny back, when we reverse the benefit charging. So if the PEO has very little filing and has a huge positive experience balance, and you are a client coming out of that PEO, you get the benefit of that huge positive experience balance and the very low claim history. If you are in a PEO at PEO level that has a tough time fighting unemployment insurance claims because the clients are mostly in an industry that has layoffs and they have a huge negative experience balance, lots of claim activity, you are going to take that negative experience balance and a portion of all of that claim activity with you when you go.
Next question.
Can a reimbursing client be serviced by a PEO level reporting level PEO?
So that sort of an interesting question. Yes, a entity which is otherwise unemployment exempt can join a PEO at the PEO level. However, when they do so, the co-employment relationship changes the nature of whether or not those workers are excluded under the Act. Because they are excluded due to the nature of the employer, and at a PEO level, PEO is the employer under the Act, then the workers are no longer in an excluded relationship because of their employer. They are in a non-excluded relationship with the PEO. That's why the Act specifically provides that at the client level, a FUTA exempt organization remains SUTA exempt to the same extent they otherwise would be and retain their right to be reimbursing. At the PEO level, you are saying that you do not wish for your clients to be treated as individual entities and that we should evaluate the employment relationship based on the PEO's liability for unemployment purposes with regard to the employment. So a government, a 501c3, a church, they can all join a PEO level PEO, but once they do, the employment relationship of the worker is with the PEO and not with the entity, which would otherwise be excluded or have diminished liability, the ability to be reimbursing under the Act. Client level, you don't change that qualification relationship, so you don't change the employer relationship, so you don't change their ability to either be excluded or elect to be reimbursing.
When rates are calculated, the calculation includes 3 years of taxable payroll. Does the client leaving a PEO level PEO take a percentage of the taxable payroll for the prior 3 years?
Yes.
That's all the questions we have for right now.
Okay, wow. So I think we have time left, don't we?
3:30 or 2:36?
We are either super efficient or everyone is too confused to ask questions. I like the former, the latter not so much. And we didn't do any polling questions for this one. Okay, can you create some polling questions for us, Jeremy? Well, let's start with the softball question of whether or not the participants found the information to be beneficial. Was this a good use of their time? And in the meantime, if you have more questions, just type them out for Jeremy. Was this a beneficial use of your time? Simple yes or no there. And while the poll is open, I'm going to flip to our last screen then, that is our contact information. The very last email box, Pro Employer Clearance, kind of spelled without some letters there, that is a group mailbox. I'm going to strongly recommend that folks use that to communicate with our team, because if someone is off on vacation, traveling for a conference, winning the lottery, this is an email box that can be used by multiple people, so you're always going to have somebody that's monitoring that particular mailbox. The agency has multiple mailboxes that are like that, where you don't have to rely on one person being there at their desk available to answer. And so use that. It is going to be answered right now by Liz. Our PEO specialist is Elizabeth Huffman, and she comes to us from our rate assurance division by way of our status unit, by way of our labor market information unit. Then our next PEO liaison is Monica Partlow, and Monica started in our trust fund accounting department, went to our tax status unit, promoted to a customer service supervisor, and then came back to tax and is currently our second PEO liaison. I'm Jennifer Chappelle. I am the tax director. I have been with the agency since 2003 and have been in this lovely office since 2009. So about a decade being the tax director. So I hope some of you know me. And let's see about those polling questions. Dun, 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 dun.
We had about 87% say yes, of about a 76% response rate.
Excellent. All right. So any additional questions that we have?
Is there a reason Indiana has chosen to do things this way? This is the only state that has these rules.
That is a most excellent question. So the reason that the department has this particular statute is that the legislation got passed that way. So the interest of the PEO was represented by their lobbying organizations. The interest of the agency was represented by our legislative liaison folks. And this is a compromise. If you were to look back, and you can do this, you can look at our legislative website, look back at the original proposal in 2013, you will find that the statute that came out was much changed due to some negotiation, and the agency wanted one thing, the PEO lobbyist wanted something else, and as most acts are, this one was a compromise. What could each of the parties live with? So that is why we have our everybody can be what they want to be with these particular parameters, sort of a statute. Some states don't recognize PEOs at all. Some states recognize only client level, and some states do recognize PEO level. The states that recognize PEOs at the PEO level to be the employer are very few and far between, it's my understanding. So this is our compromise to try to let businesses do business the way that they wanted to do business, but also preserve the integrity of the Unemployment Insurance Trust Fund. So that would be why.
If a PEO reporting level company migrates to client level reporting, can the nonprofit clients move to reimbursable client status?
Yes. Once you migrate from being a PEO level PEO to a client level PEO, the clients are treated as individual entities with their own relationship to the Act and their own qualification under the Act. So if you are an entity, or the client is an entity that would otherwise be allowed to elect to be reimbursing, then once they are represented by a PEO at the client level, they retain that right to make that election. They will start as contributory until such time as they make a timely election. Also, if you are an entity which would otherwise be SUTA exempt, such as a church or an organization operated primarily for religious purposes and meeting the other 3 qualifications to be exempt, then you would have no employment after leaving a PEO level PEO. Also, if you're agricultural and you don't have $20,000 worth of wages, and you don't $20,000 worth of wages in a single calendar quarter, or 10 workers in 20 different weeks in a single calendar year, you would not have wages in the year that you came out of the PEO, because that's the definition of wages for an agricultural entity. So there are a lot of entities that client level PEO is more beneficial to, because they retain the relationship with the agency. But again, that's a decision that the PEO has to make and a decision that the clients have to make. Our purpose is to just make sure that we administer the Act, level a playing field, and make sure that everybody operates in compliance so that all of the liabilities and rules are clear and nobody inadvertently fails to do something that they are required to do.
Are there any plans for another webinar specific to new PEO client level uplink site? I'm not sure if that means information about the new updated ESS that we did in regard to PEO, or just general new PEO client relationships.
This particular webinar will be available on our website in our video vault, probably mostly forever, because once on the internet, never goes away, right? Other than that, I don't know that we would have enough interest in order to create another event, but we are always open to suggestions as to what would be beneficial. We do intend to hold a webinar in the relatively near future specific to not-for-profits and FUTA exempt organizations, which are governments and 501c3s, et cetera. So because they have such unique rules and unique qualifications, that's something that we've received a lot of interest in. So we do intend to do a webinar for that. But other than that, we're hoping people just refer back to the recorded webinars and that y'all have asked great questions so that everybody gets the answers that they need. Speaking of, any more questions?
Yeah, just a follow on to that one. It was in regard to the new ESS site. So is there anything that you would like to point out that's specific to PEOs in regard to the new site?
The most important thing to know if you are a PEO at either the PEO level or the client level is that you have to report using the manual 52099 forms. You as a client level PEO cannot correctly establish a client in ESS because you have to use the PEO's FEIN number as the primary FEIN number for your client. That's how we associate the FUTA certification to the PEO and how we associate the liability to the PEO. So if you're trying to correctly set up your client with the PEO's FEIN number, you will find that Uplink says, no, that entity already exists and you can't create a duplicate account. So that is the most important thing to remember. Now, reporting for all of your clients through ESS, creating an agent account as a PEO to represent all of the clients so that you have a single log on. You can get to all of your clients at the same time. You can file one report for all of your clients at the same time, handle all of their liability in a single payment if you choose to do so. All of that works great. As a matter of fact, it's much easier than it used to be. You can have your accounting services organizations upload your files, make your payments for you. You can make your payments individually. You can get to everything about your clients all in the same place, whether you're PEO level PEO or client level PEO. Everything is consolidated and easily accessible. You can see all of the mailings, all the correspondence history, any kind of communication that the agency has attempted to do. All great, all on ESS. The one and only thing you cannot do is link your client to your PEO. You have to file the 52099 for that. And if you are a new PEO entering Indiana, that is entering as a result of setting up an administrative office and not as a result of taking on a client, you can set up your account in ESS to let us know that you're a PEO. All you have to do is correctly identify your NAICS code. However, you cannot make your election via ESS. Again, that is a manual process.
Where can we find SOT codes?
My favorite place to find SOT codes, and I should say to use the link in our ESS reporting guide to research and analysis for Indiana. The folks that bring you Hoosiers by the numbers also bring you a lookup tool for the SOT codes. If you look on our website, and I'm going to put in another plug for it, www.in.gov/DWD, and you go to unemployment for employers and then look at the wage reporting guide, there's a link to the lookup tool created by the agency specifically for the purpose of determining SOT codes. Personally, I open my browser and type, hey Google, what's the SOT code for, and then a job title. They work about the same. I just like Google best.
When the client is registering for an online account, when the PEO reports at the client level, which FEIN is used for registration?
The PEOs. So the PEO will send in the 52099. Liz or Monica will create the account. They will notify the PEO of the account number, and then you will use the FEIN of the PEO, the SUTA account number provided by Liz, and the wages for the last quarter reported. If this is a new client to Indiana, that number is 0. If they have wages in a quarter because they were operating as an employer in Indiana, the client will have to provide you with that information.
There are no more pending questions.
All right. So unless there's something Jeremy wants to ask because he thought of a question.
I was going to ask about SOT codes, but someone beat me to it.
Do you want to ask about NAICS codes?
Jennifer, what is a NAICS code?
Well, that's the North American Industrial Classification System code that represents the kind of work done by your business. If you type in at the U.S. Census Bureau, because that's who created them, professional employer organization, it will return the correct PEO NAICS code for you. So make sure that that is the one that you are using if you are a PEO. And if I was really cool, I would know what that was. So let's see if my internet will work now. Okay. It is 561-330. So that's basically how I look up most everything, guys, including Indiana Code 22.4, which is our act. And Jeremy says we have more questions.
When sending in the manual 52099 form for client level reporting, how do these clients get associated to our ESS account?
So let me, oops, wrong button. So when you are sending in the 52099 at the PEO level or the client level?
Client level.
Okay. You log in under your agent account. Hopefully all of our PEOs at the client level have created an agent account with us. So you're going to log in at the agent level, and they should be there because Liz is going to attempt to associate them. Now, she may have to open a ticket to do that because we don't actually have the ability to put a client with an employer at this time. So that would be one way that we can do that for you. Or as an authorized person on the account, you can log in through any of your clients that you already can log into as if you were the client. Because again, all you have to know to log into a client is their FEIN number, which is your FEIN number, their SUTA account number, which Liz or Monica is going to send you, and the last wages reported, which you can either get from your client or you can wait until after you have filed the first report for them and then just use what you already know. These are our security questions because the first two you can find out in a couple of different places. That last one is impossible to know unless you're an insider with sufficient information about the company to discover it. So that's why we use that as a security measure. Once you've reported for your client, you know that, and you can go in and link the accounts together under user maintenance, using the add account function. And then you can have a single login either through your PEO account. If as the PEO you have administrative staff in Indiana and you have an employer account anyway, you can add all of your clients to your administrative account. You can do that even if that account is inactive, by the way, and you can get to all of your active accounts that way now. So I would recommend right now the latter, but if you can't do that, send an email to our general email for the PEO staff, and we'll open a ticket to link the accounts together. But that's something that has to be done at the development level. We can't, as users, do it. again, for security reasons.
What should someone do if they're trying to register for ESS and they get a notification that the email address is already in use?
The shortest and easiest answer is go to Gmail and create a new email address for use with that particular functionality. Not a great answer. Answer 2, link the account through another account that you already have. That way you have a single log on through an account that you have already associated that email address to, and then you log on to one account and you have a list of accounts that are linked and you can select. You have to have the same 3 items of information, answer the same 3 security questions, no matter what. So using under your user maintenance menu, the add related account function is the best and easiest way to do that.
There's a code we were supposed to be putting on the reports for an intern code, and I think they're asking about SOT codes. They're saying intern code. And so could you just describe what the SOT code is for this person?
Okay, so a SOT code is the standard occupational classification code. And so if I wanted to know what the SOT code was for, oh, my job, if I could spell. This is always fun. You guys get to watch me not type very well. Okay, so what's the SOT code for, and you can see I do these a lot. So the SOT code for an office machine operator, except computer, or I can go here, look up the ONET, management occupations. You just have to know what the person does, what their job title is, and then you just use these first 6 numbers here. So if it's a first line supervisor of office and administrative support workers, the SOT code is 431011. And SOT codes don't change depending on the level of what someone's doing. So if somebody is a welder, whether they're an apprentice welder or a master welder, they're a welder. So you look up the SOT code for welder. Now, if you need help, call our 800 number, or just our general number, listen for the prompt for employer tax questions, and then select the prompt for, it's prompt number 3 right now, but it's just general unemployment tax questions. And any of the folks that answer the phone will help you look up SOT codes. You can also call our labor market folks in research and analysis, and they will look them up for you also. So if you can't find the SOT code, and again, it's pretty simple to find if you know what the person does for a living, because all you have to do is describe what function they perform, and that's what the SOT code represents. So if you can't find it, you just need help, you just want to hear us confirm it, give us a call, we'll look it up.
Can bulk filing be utilized if doing the client level filing method?
Absolutely. All you have to do is log into an agent account, and we'll create an agent account for you if you don't already have one that can't be selected by other employers. We call that an ASO account, or an accounting service organization account. You log in there and you can upload a file with all of your clients all at the same time.
Are SOT codes required to be submitted on the quarterly reports?
They are required because the regulation says that they are required, but there are no negative effects at this time for not having them. The agency would like them, and we will help you to find them. We will fill them in for you if you don't fill them in, and we will give you a call and we will ask you questions like, hey, what does Jeremy Dexter do for you? And then we will just type it in for you and save it. And then every time you go to report again, that information is persisted. So they are required. All of the information in all of those fields is required, but there are no negative ramifications of not having the information at this time. And we are now out of time. Yep. Unless anybody has anything that they want to squeak in this last few seconds, we're going to say goodbye and thank you so much for attending. We appreciate the opportunity to bring this to you.